So EVgo stock is way down, as you can see from the monthly chart. Just a couple of years ago, it was trading roughly at $15, and today it's trading at roughly uh, $3. However, it did get a nice pop, roughly 15% this week, thanks to Blink Charging, as they announced uh, favorable earnings that are coming up. And not only did EVgo price get a surge, but we also saw it on ChargePoint as well. Now, before we look at this beat up chart, which I can explain, I do want to get into this article. So given how precipitously shares of EVgo have fallen in recent months, this week's rally in EV charging stock may have caught many by surprise. So EVgo last reported quarterly numbers in November, and they were impressive. Revenue surged 234% year over year to 35 million in the third quarter as the company continued to build out its EV charging network and expand its customer base. EVgo also upgraded its full-year revenue guidance range to 148 million to 158 million from the previous forecast range of 120 million to 150 million. EVgo has yet to release its fourth quarter numbers, but investors now perhaps expect the company to deliver a strong quarter and keep growing in 2024, despite fears of slowing down in the growth of the global EV market. Again, you can thank rival Blink Charging for reigniting EVgo shareholders' hopes. So what happened? Blink Charging stock surged by double-digit percentage this week as well after the EV charging company said it expects to surpass its revenue guidance for Q4 and 2023. Now, one of the biggest reasons why EV charging stocks lost momentum in recent months is a slowdown in the EV industry. What with leading EV makers slashing prices to boost sales and dialing down their expectation for the near future. So we just saw a report that Lucid just slashed their prices on their EVs. Now, Blink Charging's estimates beaten numbers give investors some hope that EVgo too could deliver when it reports its numbers in the coming weeks. All right. So EVgo will report their earnings. It appears in March 20th. Now, let's break down all this artistic artwork here. All right, so we have this macro wedge formation. We have a level of interest at $7. We have another level of interest, we'll say at $4. And this is just would have been the bottom of this wedge pattern. Now, personally, I do think that EVgo and the other stocks in the industry are in this bottoming out process, highlighted by this, I'll call this the yellow smiley face, right? This is just a bottoming out process or an accumulation phase before prices eventually go higher. Now, typically when you bottom out, you don't go straight up. Typically you retest the bottom. So hence the W pattern that I drew. Now, price is forming potentially a double bottom as we speak. However, I would need more confirmation to confirm that. And you can see what I had shown on the monthly chart. Let's put that in. Guess this fuchsia color. All right, so potentially prices at the bottom. This W pattern might be taking place right now, right? I was expecting this W pattern to take place this year, but potentially it's taking place uh, over a 4 or 5 year, 5 month span. Now, if price has and will move higher, we need confirmation. So assume that this is the apex of the W pattern. Call this little w. What we need to see is price move higher, close above the apex, close above the $4 level, right, which was previous support, and then potentially retest before going to that next level, which would be $7, where you had support, support, resistance, resistance. Now this is the daily chart, and what we saw in the weekly chart, this is the apex, this is that $4 level. On the daily chart, confluence, if you get closes above the $4 level, would be also prices above the 200-day moving average. Typically, when you are below it, you're in a secular bear market, and above it, you're in a secular bull market. First thing that needs to happen, though, is you need to see, and we're kind of seeing that now, the remaining moving averages converging. But you need to see your momentum moving averages. This is the 13 and 26-day moving average start to point up. You need to see that bullish crossover first, which potentially is in the makings. So what do I suggest? It depends on your risk tolerance, your financial objectives, and your time horizon. I would suggest look at the financials, and then potentially, if you believe in the stock, you can dollar cost average, or you can wait for more confirmation, which would be if and when prices get above the $4 level. Thanks for watching. Subscribe. Please like the video.